Hey traders, it is Sunday evening, March 15th, and we just learned that the Fed is going to lower interest rates to 0%. It's about as much as they can do, but they also are going to be doing a massive $700 billion quantitative easing. So they're throwing the kitchen sink at this. They put $1.5 trillion worth of liquidity into the system last Friday. S&P futures down about 130 points on the news. So let's take a look at what that means, and then let's take a look at another trade. Please make sure to watch the video that I recorded about 2 hours ago. That's got a lot of market analysis in it. And as I explained in it, the market is bound to go lower. All the bad news is yet to hit. The economic impact of the coronavirus and all the restaurant closings in Illinois, the travel bans, all of that has yet to play out. So it's going to get worse before it gets better. But hopefully the markets will take a little bit of comfort knowing that the Fed and all central banks are going to be doing everything that they can. All the cross currency swaps are currently in place right now, so all the sovereign governments plan on guaranteeing each other's currencies. So this is all very, very necessary. We need to get through the next month or so, and then things should start to settle down again. So all the central banks are trying to avert a global financial crisis because of the coronavirus. So you can see here that we've got the chart of the SPY. As I'd mentioned in my other video, you've got this big spike that happened in the last half an hour of trading on Friday as the president rolled out all of his stimulus plans and their plans to try and contain the coronavirus. So this move right here from 255 all the way up to 270, that was about a 150 point S&P 500 move. And so we can expect that we're probably going to retrace all of those gains that we got on the close. So we should be somewhere in this 255 range. What I'll be looking for on Monday is I want to see that low around the 245 level hold. I believe that's a really good support level. In my other video, I also had mentioned that I believe 265 is going to emerge as another nice support level. So we've got kind of a range establishing itself between 245 and 265. I think those two levels will be magnets. The real low end, I think, is 235 on a short-term basis on the SPY. So here's what I'll be looking for. We get this initial pullback on Monday. I'll be looking at some point during the day for a pullback down to this 245 level. If that 245 support holds, I think there will be a chance to sell an out-of-the-money bullish put spread. I gave you a stock to watch in the other video. I will be liking that if that support at SPY 245 holds. But there's another stock that I also like, symbol CTXS. Some of you might know it as GoToWebinar. And this is a company that has a lot of users in the corporate arena. They've got a lot of universities that are starting to use their software so that they can teach their classes online. Lots of public schools have been closed, and they'll be closed at least in Illinois for 2 weeks, and they're talking, in many cases, closing them for the rest of the year and having virtual training. Well, CTXS is in the perfect position for that. And I was on their website. I also read that they have all the Big Ten schools, all the top 10 major universities are also using CTXS software. So this company should actually do quite well. Let's take a look at that daily chart. Here you can see that the stock had pulled back on the initial coronavirus news down below that 200-day moving average. Let's overlay the SPY. And again, the baby is thrown out with the bathwater during the initial phases of that first decline. But calmer minds prevail. They start looking at companies that might actually prosper during this event. CTXS emerges as one. So we get the next wave of selling last week. This is Thursday's price action. Here is the key thing to watch. You see how the low right here on Thursday was higher than the prior low? That means that buyers are coming in to support the stock. As soon as we got that rally Friday afternoon, it went right up to the 100-day moving average. Now everything is going to take a beating on Monday, so the stock will probably pull back to this 200-day moving average. Here's the trade I like doing. I like selling that 100 strike price right there. And I would be going out to the next expiration, which is actually going to be March 20th. So let's bring up that option chain. And here you can see the March 20th expiration. As you take a look at these options, you'll see they are all whacked out. Look at these bid-ask spreads. $1 bid offered at $4.90. 70 cents bid offered at $4.90. Are you kidding me? How are you going to get a trade done in that? Well, believe me, there are lots of proprietary trading firms. They're running their algorithms. They know based on market volatility and stock price movement what the probability of success is for that trade and where they're willing to do that trade. Here's where I'm willing to do that trade. If I can sell this spread, and there are 2.5 points between the strike prices, that's your maximum risk, $2.5. I want to bring in $1 for that spread. If I can get $1 for it, I'll do it all day long. That means, in essence, I am risking $1. I'm risking $1.50 to make $1. How does that math work? There are $2.50 between the strike prices, and I receive $1. So $2.50 minus $1, that means I have to put up $1.50 in margin for it. I've got a $1 credit that I'm getting in. If that trade were to expire worthless this Friday, which is also quadruple witching, so we can expect lots of excitement and lots of action this week, lots of movement. So $1 possible profit potential, 150 max risk. That would be a 66% return on that investment if this spread expires worthless. Given that the market would have to take out Thursday's low and go substantially lower, I think this stock is already starting to find support because people realize that, hey, if universities are going to finish their semester virtually, and it's all going to be online classes, CTXS is going to make a ton of money in this environment. This is a stock to buy. Same with high schools. So I like the stock. Let's take a look at that balance sheet. We're going to review this spread one more time here. We're going to be selling the March 20 $100 put. We're going to be buying the March 97.50 put. Both same expiration of March 20th. We're trying to get $1 for this spread if the market comes down and finds support at SPY 245. Well, what does that mean, Pete? That means that if the market's in a free fall on Monday and we blow right through that 245 support on the SPY, all bets are off. I don't want to stick my head in the noose if that happens. But if we get a nice, sharp, steady pullback in the first hour and a half, 2 hours of trading, those prices will come in for us on that spread. It'll probably be one that we can get off. Yes, then I'd like to do it if the support keeps holding throughout the course of the day. Get that trade done if the price is out there. Let's take a look at that CTXS balance sheet. Very important. We got to make sure that these companies have plenty of cash on hand so that they can get through this rough patch. So we're going to go into the stock ER, take a look at it. There you can see they've got $4, almost $5 worth of cash and about $8 worth of debt. That is a strong balance sheet. So they've got a little bit less cash per share than debt per share. They got plenty of cash to get through this rough patch. They're not trading at an extreme PE ratio. The forward PE here is about 19. This is the kind of company that's really going to benefit from this crisis. So I think that their earnings are going to be gangbuster good. I think the stock's got a lot of cash. We've already seen that higher low. We're looking for that panic selling tomorrow. Hopefully all the things that the Fed is doing is going to attract buyers sometime through the course of the week. We can expect to be pelted next week by more corona cases, greater spread throughout different states. So there's going to be negative news, but at some point I think we hit the saturation point, and I think that everybody starts to take a nice deep breath and understand that we just need to get some clarity out of all of this. I'm just looking for a market pause. I'm not looking for the market to bounce higher and rally like mad. I'm just looking for it to be able to hold that 245 support for a little bit of time and I'm looking for this stock to actually move higher against the market, given that they are going to benefit from all that's going on. So that's a nice trade that you might be looking at. Again, here are the caveats to the trade. SPY 245, we must see that support level hold. If we're blowing right through it Monday morning, you got to hold off on that trade. That is a major support level for the market right now. If that 245 support level is holding, and if CTXS pulls back sharply on the open, and you've got an opportunity to sell that bullish put spread, selling the 100 puts, buying the 97.50s for a $1 credit, I think that makes a lot of sense. You'd be taking advantage of some real panic selling, and you'd be getting properly rewarded for that trade. So that's it for tonight. Please make sure to watch the swing trading video that I put out about 2 hours ago on Sunday. I do a lot more market analysis, and you'll get more flavor from what the overall market is going to be doing. That's it. We'll see you in the morning. Thank you. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.